Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:19 a.m. Central Time, and I'm recording this in preparation for the market day, May the 21st, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's see what we had in the overnight action. Slightly negative. We have the weekly unemployment report in about 10 minutes. That could move things, but as it stands right now, all four of the broad market indices are just barely negative. Could be called really scratch almost. Crude oil is down, say that again, up almost 1%. And you have euro up about 0.25%, bonds up about 0.37%, and gold at scratch. In terms of overseas action, looks like it's mostly scratch with the exception of China. China's up almost 2%, so big move there. Hong Kong down about 0.22. Japan scratched. Germany down about 0.36%, and the United Kingdom at scratch. Okay, for our own macroeconomic reports for today, you have the weekly unemployment claims, flash manufacturing, existing home sales, and the Philly Fed Manufacturing Index. If you're a natural gas trader, you also have that inventory report. In addition to that, we do have a couple FOMC members speaking, Fisher and Williams, and that will be about lunchtime. Kind of keep an eye on that. There's actually quite a bit of activity for today. If you get through today, tomorrow we'll have just about nothing. We do have core CPI at before the market opens, and that's about it. So things could get really quiet tomorrow afternoon. A lot of traders will be out of town and heading for the Hamptons. And the bottom line is that as you head into the holiday weekend, it could get very low volume, very poor follow through. So be careful if you continue to trade through the day tomorrow. Obviously, Monday is a trading holiday, so we and everybody else will be gone. I think there may be a little bit of futures activity for a couple hours, but there will be nothing that will be tradable occurring on Monday. So enjoy the time off and do something else. In terms of our volatility, look at this short-term VIX, 10.48, getting really low. IV percentile 16.2, 16.25. So all four broad market indices are in their lower quartile, so really quite low. We had the potential for fireworks yesterday, but it was pretty much a dud. After the FOMC, you had an initial thrust up, ran up to some resistance areas, and then just promptly fell back. And when it was all said and done, was largely a scratch day. Doji patterns pretty much on most of the patterns here. Here's the SPX, small body, really, after setting that intraday high, pretty much ended up back where it started. So FOMC was not terribly impressive to the SPX folks. The Russell also a doji. NASDAQ, another doji. Dow was probably the one with the most action of significant, but I guess this is a bearish engulfing. Yeah, probably. So, but none of these candles are terribly super impressive. It just didn't come out of the FOMC with anything that's going to get you terribly excited. In terms of a regular daily report, not a lot of new items here. We are still phase 3, higher highs, higher lows. IBD status is confirmed uptrend. GMI index 6 out of 6. The market posture is still very bullish. Position sizing opinions are still both aimed at 100%. Market posture specifically, look at this, S&P and Dow very bullish. NASDAQ on the verge of being very bullish. Russell strongly in the bullish zone now at a 60.5. Hedge warning status a 0+, normal with cautionary aspects, and in most ways this is really quite normal at this point. The cautionary aspects come from the daily squeeze being on with the VIX, and of course that cannot last for a prolonged duration. And we do have a skew that's a bit high, and that can be a warning sign. And then we have one of the intermarket risk aversion indicators that has fired as risk off. So we've seen a lot more warning signs than we have right now. Mostly the primary warning sign is the fact that this is just barely out of the previous range. We're looking to see, does this range hold? Do we get a pullback and then a bounce off this range and really set the stage for a new leg up? Without that kind of confirmation that we're moving away from this previous range, we still have that concern that this could just be another head fake and just fall back into the range. If that happens, we're likely coming all the way back down to the bottom of the prior range, around 2070-ish area on the SPX. So, but anyhow, hedge warning status 0+, and really quite minimal cautions at this point. Our special opinions, option income strategies, everything's fine there. VIX is inside the acceptable window. Just be ready for increasing volatility from your Vega aspects of your strategy. Covered call, cautiously bullish. Use an equal distribution of 1-to-1 between in the money and out of the money strikes. Put selling, also quite acceptable. Just consider put credit spreads with defined risk or scaling into positions until you have that confirmed breakout that we're looking for. Not a lot of changes here today. Sector market posture, you see transportation, that is a warning. Transportation got hammered yesterday, and the fact that the NASDAQ, the Russell, and transportation have all been relatively weaker than the S&P, have all been cautionary tales to say, where is this market going? Telecom also poor, energy poor, retail continues to also struggle more on a relative sense. You see the other sectors though doing much better. In terms of percent change yesterday, telecom was up 0.46, energy up barely, utilities up barely, so none of these were strongly up. But now also you can say that nothing was down by a significant amount either. In terms of individual industry groups, you see retail actually has been climbing back up on here using the shadow trader method of strength. Internet, healthcare, biotech, railroads, and transportation. Obviously a different system there. I would, in my own work, have found that retail and some of the aspects of healthcare and certainly transportation, certainly have taken some short-term hits. And while this is reflected in some of these numbers, like transportation dropping a little bit, transportation just flat out wouldn't be the first place I'd be looking at for a bullish trade right now. So some differences here, but obviously a lot of this goes into what time frames you're looking at and how you rank these things. That should be enough for today. As always, greatly appreciate your reinvestment into us by liking us on YouTube and sharing with your trader community about what you have found here. If you have found this helpful, more information is available on the website at this address. Performance matters. We're quite transparent with our performance. You can see exactly what we're modeling in terms of entries, management, adjustments, and final exits by modeled size, model position size. Disclaimers as always. Hit the pause button if you need more time to to review. And we'll look forward to seeing you back here tomorrow morning before the market open.